Good morning, everyone. This is Morgan Hill, CEO and founder of Hill & Hill Financial. It's Monday, March 30th at getting close to 8:30 Eastern Standard Time. Wanted to share a few slides. I've been having lots of conversations with lots of folks as they watch what's going on geopolitically, globally, as well as the market, gas prices, those types of things. And as always, I'm not trying to predict anything, but just want to give some perspective. I think that's always helpful. And although we've talked about some of these things in the past, I thought this morning it would be worth repeating. First of all, let's talk about corrections and pullbacks. A pullback in the stock market is measured by approximately a 5% downward turn. Corrections are 10. Bear markets are measured when you hit that 20% mark. Right now, when we think about pullbacks and corrections, 5 to 10%, the chart up here just shows over time the number of times in which we've seen pullbacks experienced by investors. So it's not unusual. What's unusual, I think, now is given the aggregate amount in the market. For example, the Dow Jones Industrial Average hit a peak of right at 50,000 and a few points not too long ago. When you're down 1,000 points, that's only a 2% downward turn. But boy, in the number, 1,000 seems like a lot. Well, 15 years ago, 1,000 was huge, but now 1,000 is just a little bit. 2,500 is a pullback. 5,000 is a correction. And so actually, as we sit here this morning, we're entering that correction, or it depends on which index you look at, that correction territory. I just want to share with you, it's not unusual. It's disconcerting, but it's not unusual, and it's part of the normal movement of the market up and down over time. And as we'll see in the final slide, over time, the market does go up. You do want to make sure that you're balanced within your risk tolerance, as well as what kind of volatility you can either manage or you need to avoid, given what you're using your money for, whether it's pure growth or whether you need some of it for income. But again, just kind of sharing that stock market pullbacks and corrections are inherently normal, not enjoyable, but inherently normal in the market. This next slide that you'll see is stock market drawdown since 1928. Drawdown is the official term for when the market drops. What you'll notice, obviously, is we go all the way back almost 100 years, and we look at even, parts of the Great Depression, world wars. I think about the energy crisis that we had back in the 70s, all the ups and downs. So if you look at this bottom part, the blue, that shows the downturns. If you take a look up top, though, what's called the slope of the line, I learned that from my 10th grade geometry teacher. Over time, the market moves up. Now, again, it's just kind of giving that correlation that the market has moved up over time, even during some pretty big geopolitical global economic events that, again, can be very disturbing. The Great Recession in 2008, even COVID during the 2020, 2021, 2022. The key is just to have this perspective. Now, as I always share, when we're looking at risk, what's the purpose of the money? If we need money to generate income, my belief and strategy has always been we don't want volatility. If there are some funds that we can absorb some volatility risk, and we do want to have that exposed a little bit more to the market based on our age, use of the money, time horizon, all those things, this is just giving some perspective. So as you're watching the market, perhaps as you got Squawk Box on or something like that, this just gives a little bit broader point of view than maybe what we're looking at within the last few weeks and the last few months. As we take a look at this final slide, I think it's a slide that we know, but a slide worth remembering. Staying investing versus trying to time the market. What often happens is the old joke, I like to buy high and sell low. People are trying to time things, and I think we can all agree that that's always a very dangerous strategy, that we think we can predict things. So as we take a look at our worlds of money, as we take a look at money that we've set aside for our rainy day, well, that's, things like bank or credit union. Monies that we may have for growth for the future, we can take some of these ups and downs, pullbacks and corrections, and the key is staying invested. And then when we have strategies that we're using for income, my belief, and I think it's yours as well, we want to make sure those are non-volatile. Maybe those don't move up and down in the market. So when you're trying to get that monthly paycheck in order to live our life and go on vacation and go see the grandkids, that's not subject to what's going on based on geopolitical wars, market conditions, economics, etc. So staying invested, staying balanced, staying in line with your risk tolerance and your age, those are the keys. So as always, 800-887-9647 is the number. Feel free to give me a call. We've been having lots of conversations with folks just to try to navigate a very disconcerting time. And again, we're not trying to get political. We're just trying to make sure that we build that retirement no matter what the external conditions are. So again, feel free to call at any time, 800-887-9647. Thanks so much.